Welcome to the BBC's News at 1. For the second time in just 3 months, the taxpayer is pumping billions of pounds into Britain's banks. This morning, the government unveiled a package of measures designed to get banks lending money again to businesses and individuals, and underwritten by the taxpayer. And as if more proof were needed about how badly the banking sector is doing at the moment, the Royal Bank of Scotland has announced record losses of over £7 billion. Well, Richard Scott is here for more. Richard.
Thanks, Kate. Well, after its opening salvo, the government has now fired a broadside against the economic downturn. It's unveiled a series of measures to encourage banks to lend again and to provide support to businesses.
I will not sit idly by and let people go to the wall because of the irresponsible mistakes of a few bankers. Good businesses must have access to credit. Jobs should not be lost needlessly. It is because of this that we are taking the action to expand lending that we are outlining today.
So what are these measures? Well, first there's something called the Asset Protection Scheme. This is basically a giant insurance policy. Banks pay the government a fee, the insurance premium if you like, and in return the government will cover future losses on their investments. Now the bank has to cover the first part of the loss, just like an insurance excess, and a percentage of losses beyond that. Both the insurance excess and the fee will be based on risk, just like you or me buying car insurance. The idea is that if the banks know they're protected, they'll be happier about lending again.
The bank will need to sign a lending responsibility agreement, binding with a duty on directors to comply, and which we will audit in return for the support that we are giving. The agreement will require precise and clear quantitative targets for increase in lending levels for people and for businesses.
There's also something called an asset purchase facility. This is a £50 billion scheme to let companies sell assets to the Bank of England. Essentially, the Bank of England will act more like a high street bank, and companies can borrow money from it instead. Now, business reaction has been positive.
I think it's a massive step. We don't know what's going to happen to the economy over the next year. This isn't a silver bullet. It's not going to turn the economy around. But this is a real force for stability in the economy for the short term, which is very important.
But whilst business is broadly in favour of the plans, the opposition don't think the government is being straight with the public.
The truth is, it is a desperate admission that the first bank bailout hasn't worked and that the country's got no option but to try and rescue the banks again, because we can't allow them to fail. But I think they should be straight with people about the extent to which taxpayers are on the hook and the extent to which their policies so far have not worked.
The government's coming back again with an even bigger package, with even vaguer commitments, and we're expected to sign up for it, and I'm afraid I'm going to be very, very sceptical.
The government also said today that Northern Rock, which we already own, is going to stop cutting back on its lending, and we're increasing our stake in Royal Bank of Scotland, so we own 70% of it. RBS is facing some truly eye-watering losses. The bank said today it expects to have made a loss of £7 or £8 billion last year. One thing we don't know at the moment, though, is just how much this whole economic bailout will end up costing us. Kate.
Thanks very much, Richard. Well, our business editor, Robert Peston, is here. Robert, let us pick up on the RBS losses then. Absolutely huge. Just how did they get into that?
It is astonishing, isn't it, Kate? I mean, we heard a lot over the past few years about the end of boom and bust in the economy. Bankers were telling me it was the end of boom and bust for them. They had so many years of bumper profits. And they claimed to me, consistently, that they understood risk, that they were managing these global operations well. That was a bit of a bad joke today. Royal Bank of Scotland did this massive takeover of a big Dutch bank, ABN. There were a lot of critics of what it was doing. This was back in 2007. Much of those losses that it's incurred come from that takeover. I mean, it must go down, frankly, as one of the worst takeovers in corporate history. But here's what worries me. Up to 8 billion of losses, cash losses. Actually, it's about 47 billion if you include other write-offs in all of this. I mean, mind-boggling sums. But these figures don't show the effect of the recession. Problems for ordinary British borrowers, companies and individuals. So this is not the last loss we'll see from this bank.
No, exactly. Where is this going to end? And also taxpayers, perhaps justifiably then asking, why should we foot the bill when the banks have been the ones that have been making these sorts of decisions that have ended up with these sorts of losses?
Viewers, listeners, readers of my blog have all been saying that they don't understand why they should as they see it, bail out the banks for their foolish lending, their foolish investments? The answer, according to the government, and many economists would agree, is that if we don't get the banks lending again, this recession we're in will turn into something a lot more prolonged and a lot more painful. And the only way to get them lending again is to give them confidence about the scale of the losses they face. Unfortunately, to give them the confidence that they know what the losses are, we, taxpayers, are going to have to incur a lot of those losses on their behalf. And it's therefore perfectly understandable that lots and lots of people are very, very angry with the banks.
Yeah, just looking at the emails coming in today. Robert, thank you very much indeed. Thank you. Well, to find out